With me now is Phil Newman. He's the director for Metals Focus. Phil, good to see you.
Good to see you too.
So, of course, we're going to be speaking about gold and silver forecast. Let's start with gold.
Sure. Well, I think it's worth starting with gold because at the moment silver really is following gold. So I think what we really need is some clarity from the Fed in terms of the interest rate announcement. That is very much the big driving decision or big driver for gold prices at the moment.
Well, we'll see what comes out of the meeting conclusion on Wednesday. What are you suspecting, Phil, that will they announce an interest rate hike come September, come December, next year?
Well, I think one of the key factors now, actually, for next year is the election next November. And I think when you think of that, our understanding is that the Fed, if it's going to raise interest rates, wants a very clear gap, a clear window between the interest rate announcement and the election. So in other words, sooner rather than later.
So looking at gold's price range now, seems to be stuck in this 1180, 1190 range. What would it take for it to break out of this, Phil, whether on the upside or downside?
Well, I think what you need really is, first of all, if you have an interest rate announcement, then we should see gold weaken, at least temporarily. But in terms of the upside, where you're looking for maybe things to really unwind or escalate in Europe. But if you look, for example, at the bonds, what they're doing in Europe, then no one is really pricing in ultimately a sort of an exit of Greece from the euro or really significant contagion, for example, in southern Europe.
Now, Phil, looking at silver now, it had a good month of May. It was up 3%, and we saw strong demand coming out of India. Was that something that's surprising?
I think what was quite surprising from an Indian point of view is the strength. You're absolutely right. Jan to May was up about 20% year on year. And that's against a record level in 2014, which itself was up on 2013, of course. And it's really quite incredible that they're able to sustain those imports.
Now, most analysts I've been speaking to say that Palladium really has the best story right now. Do you agree with that?
Absolutely. In terms of the key underlying fundamentals, the supply-demand fundamentals, then if you're looking at sort of gold, silver and platinum and palladium, it's very much about palladium. Of course, from a price point of view, we're not really seeing that. But in terms of looking ahead for this year or into next year, then very much it's palladium.
And what are the strong fundamentals driving palladium?
Well, it's still really the core in terms of the automotive side. Still very decent numbers coming out of the likes of the US and also China. These are very much the key markets in terms of the light duty sector.
All right. So what's your forecast for gold?
For gold, we are still expecting sort of a slight decline this year. If you look at the full year average, it could sort of slip by about 6%. And for silver, it could be down 10-15%.
All right. And palladium?
Palladium, again, I think we are also looking for prices to be a bit weaker, funnily enough, but then for, I think, continued strength for 2016.
Finally, Phil, you're a speaker here at the IPMI. You've been attending the IPMI for years. What's the sentiment like this year?
I think the sentiment is quite challenging. I think given that you have most of the key refiners from around the world are here. And if you look at that segment, the recycling has been pretty weak. But now a lot of those declines are behind us. But I think the competition there is pretty intense, and you're sort of reflecting that sort of sentiment in the market today.
Phil, thanks so much for joining us.
Pleasure. Thank you, Daniela.
And thank you for watching. We'll have more for you on Kitco.com.